Last year we saw some changes in the uses for equity release in comparison with previous years. In 2021, due to the pandemic, it was very restrictive. And from Q1 to Q3 last year, we saw that growth again. We actually saw people going on holiday and using it for things. It did change to the latter part of the year post the budget announcement in September. We saw a lot of people remortgaging, lots of rebroking, and also settling of unsecured debt. I think it's good for financial advisors to look through that by way of their review with their clients and see how they can assist them going into the year. Cost of living and the energy crisis has had a massive negative impact on these customers. We want to make sure that they're in the best possible stance going forward to both for their monthly income, but also to make the use of the assets that they have. And as we know, their house is the biggest asset. I think one of the biggest growth areas that we'll see is around gifting. The energy crisis has hit families really hard, and I think parents who are able to do equity release really want to help their children. I think we will still see people needing help to get on the property ladder. House values have changed slightly, and it's very regional specific, but I do think that need to help as the options for mortgages for first-time buyers has been limited, so therefore less solutions, and that's where families can step in and help their children. What's really important for lenders to support advisors going into 2023 is how can we evolve our products. When Standard Life Home Finance launched, the latter part of 2021, we came to the market with some new innovative USPs that no one else had done. Our fixed ERCs were the lowest in the market at 8 years, and we saw some great new entrants last year, but at the moment Standard Life Home Finance have still got the best fixed ERCs. Downsizing protection from day one, again something that advisors have looked to us for some real help and support. I think the new standard that Equity Release Council brought by way of servicing the repayments was a really strong message that we want to support our advisors as much as we can, and that's something that came in from day one with Standard Life Home Finance. So having that ability to repay on a monthly basis, or indeed repay some of the capital on an annual basis, will really help customers to modify their lifestyle, their income, and ultimately what they use equity release for going forward. What we saw towards the end of 2022 was advisors being slightly more cautious, but also then looking at smaller advances and perhaps more concerned about what that meant. One of the biggest challenges towards the end of last year is we saw quite an increase in the interest rates, again as a direct result of the statement in September. So whereas you would have seen a just over 3% as an average interest rate for 2021, in 2022 we saw that as high as 5.7 on an average interest rate. So when we look at the impact that has on compound interest for that customer, I think being able to service their repayments, to be able to service their plan, or indeed make a capital repayment, makes a big difference to give them that security going forward. And I think that's where Consumer Duty will come in for those clients, because it will look at the best possible ways for them to manage their income as well as their outgoings. Similar to the later life lending market, we saw the residential mortgage market change quite a lot in the latter part of 2022, and I think this makes it more pivotal for customers who are looking to help their children. So first-time buyers, house values have plateaued somewhat. They've not come down perhaps as much as some of the economists and experts say. So by being able to help your children through gifting, it will free up more options. So as products and plans in the residential mortgage market are removed or tightened, underwriting criteria, demand for a higher deposit, then this is where parents or grandparents can really help out their children or grandchildren. Our lightbulb research moment that we completed in 2022 showed us that 26% of the lifetime equity release mortgage market was female. And without sounding too gender specific, I don't think we can avoid the fact that therefore they think will act and will behave differently. One of the elements that we want to do is how we can support that. And our light bulb research that we presented really helped advisors and found that really useful. I'm excited to see entrants come into this market, such as the Mortgage Mum, who are set up with female advisors. And I think that can be really healthy to show people how to deal with female thinking or how women approach such a big lending decision. And then we can support any gender of advisor to understand the thought process they go through before deciding on the right product.